Cashbuild has posted a 5% rise in revenue, but the growth did not filter down to the bottom line. Headline earnings per share declined by 22%. This as the building materials group endured pretty much the same economic and trading challenges experienced in the previous year. But looking ahead, the company is more optimistic about the outlook for the next financial year. And joining us now for greater perspective on this performance is company CEO Werner. Werner, thank you for your time and a good afternoon to you.
Good afternoon, thank you.
And let's talk about being able to grow that top line by 5% under these macroeconomic circumstances that we're faced with.
Yes, it was certainly more towards the latter part of the financial year that we see it. I must warn that we had an extra trading week this year that it made it slightly better than it would have been. But that said, in the fourth quarter, we did see a 4% growth in the business. And we've been very keen on our pricing, and it has stimulated and attracted customers as we hoped. But it was at the cost of some gross margin that we had to forsake.
I'm keen to actually get a little bit more about that margin. Of course, there's inflation that you deal with internally as a business. Now, how has that been? Also, just managing that over the period.
Yeah, it is on the product side because of cement being 25% of our revenue. Our internal inflation from a product side was at the 2%, which was not bad at all to cope with. But on the other side of it, on the cost side, operating expenses grew by 6%. We've been known for being very cost control effective over the years, so it's very difficult to save all the time. So it's been difficult if you cannot get that gross margin that you bank to exceed your expense growth.
Let's also touch on your balance sheet at this time, maybe reflecting on debt and capital allocation over this reporting period.
Yeah, our balance sheet is really interest debt free. It's really just short term creditors that we need to pay. So we've always been very conservative in our approach towards it, and we do have always sit with some spare cash on the balance sheet for opportunities, be it product purchases or whatever, for us to be able to do that.
Yeah, Werner, we did see new stores being opened over the period. So, of course, some of that organic growth coming through. I'm wondering, with a balance sheet that is lowly geared, are you looking at some inorganic growth, acquisitions on the cards, other ways of growing Cashbuild?
Yes, acquisitions is certainly part of our strategy. We don't see that many opportunities. We're always looking around and have actively pursuing. But there's no agreement reached at this stage. So, but it is part of our strategy. Finding new stores on an organic basis will be very difficult for us. The last few years we've remained at 318 stores. This year we managed to eke out another 4. And certainly with the new model store that we've introduced, we've seen some opportunities coming our way. And hopefully next year we can do 10 of them at least.
I'm also keen to speak about the model with the new stores. I did see that you are developing a smaller model there. What is that like, Werner? And I'm wondering how it is being received by the consumer.
It's been very positive. The ones that we've opened, the 6 in total now, has been very positive for us. The word smaller is probably not always the best indication, but typically the trading floor is smaller from where we're currently trading normally at about 1,200 square meters. These ones are typically 800 square meters in that type of vicinity. But it does give us access to pre-existing buildings. That's a bit more flexible for us to get into areas and at cheaper rentals to make sure that our model does not come under pressure from high rentals when you go into shopping centers and new mall developments.
Let's also touch on the state of the consumer here, Werner, because of course this has been, the big challenge for Cashbuild. After that COVID-19 boom, we've just been waiting for the macroeconomic environment to improve so that the consumer can afford a little bit more. We are talking about interest rate cuts, but not very deep cuts. And I'm wondering how Cashbuild is taking stock of that.
No, interest rate cuts will always be positive for us. The consumers do get a bit of reprieve when that happens. The other thing that we are slightly optimistic about is the two-pot system, which we believe should see some cash into consumers' hands that hopefully they'll spend on durable goods, improving their homes. And then infrastructure spend from government and new projects, hopefully that will also contribute to more people being employed and having some money to spend on their houses.
What we have seen in the past is also Cashbuild getting, some innovation going in terms of assisting customers to pay off for their materials over time and the likes. I'm keen to find out about that model, if it's still in good standing here, and if we at least are seeing customers, building up those reserves to be able to take on the big projects.
Indeed, the amount of customers that's using that facility is just increasing every year. And the value in that amount is, or in that we have in terms of customers saving up and having money for projects is increasing every year. So it's been very positive for us. But yes, we need to make sure that we also convert it into sales and that people spend the money in the stores.
Then I would like to also touch on the South African environment here. We have seen also this government of national unity come on board right now. As a business leader in this environment, do you believe that this is something that can also just give a better faring for business? I think it's never been more difficult time to be a CEO in South Africa than maybe the last few years.
Yeah, we are positive. I mean, we're fairly entrenched in South Africa. More than 80% of our revenue is derived from South Africa. So that for us is an important market. And we're positive that the government of national unity will see more delivery, as I mentioned earlier, and that delivery and spend on infrastructure projects should see benefits for us.
Well, Werner, we look forward to speaking to you as it all emerges. Thank you so much for your time this afternoon. And that was the Cashbuild CEO, Werner Jager.